Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed. We'll have your questions addressed towards the latter part of the show. Before we begin, let's see what the global handover looks like. Wall Street rallies for the second straight day as minutes from the Fed's November meet indicate that the Fed is looking to slow the pace of its rate hikes as inflation starts to cool. Positive commentary from the US Fed also boosts Asian markets. SGX Nifty also indicating to a positive start for Indian markets. Meanwhile, yesterday, European markets ended higher as well as investors digested Eurozone economic data and awaited US Fed's latest meeting minutes. IPO street buzzing in India, but retail investors don't seem too excited. We try to decode why. Stocks in the spotlight today are IIFL Wealth, M&M Financial and Voltamp Transformers. Okay, let's get going and talk about some stocks in the spotlight today and the overall market mood for this session with Raja Venkatraman of Neo Trader. Good morning and thank you for joining us. Expiry day, what kind of an action do you foresee?
Yeah, good morning, Karunya. So, what I am looking at is that Nifty and Bank Nifty are continuing to play a contrast game. And when you take a look at the option data, which is indicating as we are on the last day of the expiry for November, we see that the pressure continues to remain on the Nifty and around 18,300 to 18,400 is an important resistance zone, which I'm seeing in the Nifty. While 42,500 based on the OI data was an important resistance zone. But now, yesterday, we have seen a shift in the OI position towards 43,000. So these are two important levels which one should track for because SGX Nifty, though, indicates that yes, there is going to be a resurgence of the bullish camp and we are going to move above the levels mentioned. But then we need to see how long will it hold on because we have seen over the last few months that a strong gap up opening which is being indicated by SGX never really reflects in the same way when you actually pin it down to the market when it's open. Now we have to see now after it's open whether it's able to sustain above the levels which I have mentioned, and that is what will be an important key point to address as we go into the day. Now, being an expiry day, there is already some cues right at the start of the day for inducing some volatility. So we should also factor that into our trading action. Now, when you talk about the indices, I would still prefer to lay bets with Bank Nifty, and I believe that the Bank Nifty, once it crossed 42,500, it has got potential to move towards 44,000. It's a very, very strong potential. Now, PSU banks are firing. Now, if private banks also start kicking in, so that will be a very good combination to look at. Now, that would induce more positivity in the Nifty, and we could see Nifty attempting to cross and flash a new high. So it's going to be a very interesting day on the expiry day for this November season.
Yeah, and we look forward to some action on the Lal Street. But let's also talk about some stocks that could be in focus on back of news flow. Specifically, a lot of bulk deals taking place. IIFL Wealth Management is the first company that I want to flag off. General Atlantic Singapore has offloaded 15% stake in the company. They were holding about close to 21% earlier, and now after this selling of stake, their shareholding has come down to 5.8%. Talk to us about IIFL Wealth and how it looks on the chart.
Yeah, the charts of IIFL Wealth doesn't look to be too encouraging, but in contrary, its parent company IIFL Finance, that stock seems to be doing really well, and if anybody is wanting to participate in the IIFL group, the IIFL Finance stock is looking to be much more promising. When you talk about IIFL Wealth, it's still struggling to clear the 1800 zone and see it's going to clear it in a hurry. So it's going to bide its time. So it would be an avoid from my side.
Okay. The next stock also from the BFSI space, and this is M&M Financial Services. LIC has picked an additional 2% stake in the company, and now their total shareholding has jumped up from 5% to 7%. M&M Financial Services has had its fair share of struggles in the last couple of months. But talk to us about the overall trajectory that you foresee, because if we look at the 6-month chart, it has done well for its investors despite all the highs and lows and all the volatility.
Yeah, like you rightly said, it has gone through its fair share of struggle. But what we are seeing is that over the last few months, there has been an interesting development in the NBFC space, and the recovery from lower levels is once again bringing back the buying interest. And what I foresee is a breakout about 210 is what is awaited. And what I can see is that the prices are nicely coiling into a nice breakout zone. So any move about 210 would definitely wager a buy. So it's definitely on my tracking list, and I would look for a breakout about 210 because it has got potential to move towards 300 within the next 2 months.
All right, okay. The third stock, again, some change of hands happening here. Voltamp Transformers. Nippon India Mutual Fund has bought 3 lakh shares at 2650 rupees a piece. And the seller in this transaction is Nalanda India Fund, which is sold close to 4.2 lakh shares, again for 2651. This one, last 1 week has been rather weak, actually, sliding around 10% on the downside. Talk to us about the way forward from here for Voltamp.
So the setup of Voltamp had its good run till April this year, and after that there has been a steady decline. So what I can see is that there's steady exit from stakeholders, and also there has been a slow and steady decline being witnessed. And what I envisage is that the decline could persist. So if anyone is having a position in Voltamp, it would be a right time to exit.
Okay, all right. Raja, request you to stay on with us. I want to touch base with the next guest as well, Manan Doshi of unlistedarena.com, to discuss what's keeping retail investors at bay as far as primary markets, IPOs, are concerned. Manan, thanks for joining in and good morning to you. Talk to us about what's happening in the primary markets, because the 4 IPOs we saw in the recent past, Keystone, 5-Star Business Finance, Fusion Microfinance, Global Health, they've managed to sail through primarily on the back of high QIB subscription. QIB stands for Qualified Institutional Buyers. Why are retail investors not as excited about the new IPO offerings?
Yeah, thank you for having me on the show, and a very good morning to you and the viewers. So if we look, the primary reason which is apparent is the valuations of these IPOs. Okay, so if we go back to the past year 2021, the primary market was in a full boom and the IPOs were getting record-breaking subscriptions. But the things have changed in the last 1 year. And now, when the primary market is in the condition of a very dull momentum, we are seeing that the valuations have taken a front and driving seat, which had taken a back seat in the 2021. And the investors have learned some hard lessons towards the end of the second half of 2021, when some disappointing listings happened. So primary reason is the valuations of this IPO. Secondly, the investors are now shifting towards the traditional and more established profitable businesses rather than the new age and loss-making businesses.
Okay. All right. So is that also the reason why people are also very jittery about the recent IPOs in the last 1 year? Yes, 2021 saw record level of inflow as far as primary markets go. But these new age digital businesses, whether it's Paytm, Nykaa, Policy Bazaar, several other companies, Zomato, they've all been struggling the entire year. What's happening there? Because has the interest significantly gone down and people are wary of staying invested in these businesses or investing in the future in these businesses, which still are yet to prove themselves as far as profitability goes?
Yeah, absolutely. And that is the sole reason that we are seeing this dull momentum in the current primary market as far as retail investors are concerned, because they are now more focused on the established and well profitable with a proven track record businesses. And this is also the reason that many new age companies that were going to hit the market in the future have now withdrawn their DRHPs and they have withdrawn their IPO plans. And they are first focusing upon profitability and then come to the investors.
Okay. Any of these upcoming IPOs that excite you, and perhaps you would want to flag off to our viewers that look exciting not only from a business model standpoint but have fair valuation as well?
Yeah, so if we look at the past 10 to 15 IPOs, the trend which is emerging is that those IPOs which are having a unique business model or having a reasonable valuations, they are well subscribed by the retail investors as well. So for past examples, if we look at the DCX systems, recently listed Keynes Technologies, so these are the stocks primarily focus upon the defense sector, which is the theme currently in the market, in the broader market also. So these stocks which are having some unique kind of business and having a good market share, or I can say that near monopoly type of businesses, they are much attracting the investors currently in the market.
All right. Well, Manan, thank you so much for joining us and talking to us about the IPO market and what exactly are the factors that are keeping retail investors a tad bit jittery, and the IPOs to look forward to as well. Thank you for joining in. Okay, back to the markets once again, and let's talk to Raja about a host of stock queries that are lined up in our comment section. Raja, the first query is again, Manan was just talking about defense PSUs and defense IPOs and defense companies. Any of these defense stocks, existing ones that look attractive? Vish KL has posted a comment and asking if any of the PSUs that he can invest in from the defense pack.
From the defense pack, I feel that Bharat Dynamics is a very good stock from the defense space. It has been continuing to perform well, and even the higher time frame charts or the lower time frame charts offer us good opportunity. There was a recent decline from the October highs, and now the stock is again getting ready for some upward drive. So that would be a good stock to consider.
Okay, all right. Actually, we're getting a lot of comments on sectoral bets. Anything from the cement sector that you want to highlight? Hari Krishnan has sent us a comment.
See, the cement sector had its fair share of run, and we had witnessed some very good upside in the cement sector from the October lows. Now, what I see is that yes, it had witnessed some move, but cement sector would not be a sector which I would watch out for, because I feel that it's going to undergo some consolidation now. So I would stay away from the cement sector. But a sector which one could track is the auto and the auto ancillaries, which I feel that they are again going to witness some action. And the other sector would be the sugar sector. So these are two sectors which I'm tracking, and I feel that there's going to be some movement in those sectors. So you could be an early entrant in those ones.
Yeah, and they are the hot favorites of the market, auto and sugar as well. Let's move on to the next query. This is from Monica. She wants to ask you about ITC, and the question is, will it reach 400 levels or should I sell and cut losses? She has entered ITC at 339 levels. What is your verdict?
Yeah, my verdict is that ITC will continue to be a slow mover. It had its fair share, and you can see that when ITC was not moving, it was being discussed, and it continues to be discussed even now after it has seen almost doubling from its lows 6 months ago. So right now, we are not witnessed ITC dipping into some kind of suitable supports. And what ITC has done now is it has come into some durable supports, and this would actually be contrary a good time to add into your ITC position, keeping a stop loss below 320. That would be my bet for the next few days. You can have a multi-day position, maybe like for the next 1 month, and you will be able to see some traction, at least a 10% move from here on.
Okay, fair point. Moving on then to SBI cards for the long term. This is a query coming in from Ashok. Ashokan, actually, sorry for the mistake. Let's talk about SBI cards. Last 1 month, very, very sluggish. Will that be the trend going forward as well over the near term, perhaps?
Yeah, SBI card, in fact, has been on a decline since its August high. And what I'm seeing is that the spirit which was there in SBI is not the same spirit which is seen in SBI Card. So probably people are buying into SBI Card in the hope that it will also show the same spirit as SBI. But then the sectoral trends matter, and what we are seeing here is that currently SBI Card, the prices are indicating probably internally there is something not okay, and that's why the prices are also undergoing the same spirit. So I would not be a buyer in SBI Cards.
Okay. I want to shift the focus back on the banking space, and I remember you started the conversation about how the bank nifty has behaved, and especially PSU banks. Gaurav Sharma is writing to us, and he wants to know your view on PNB specifically. How do you see the technicals of PNB playing out?
Yeah, PNB definitely is in a very, very good space. It had spent some time to give a move above the 40-42 level where there was a bit of struggle. But once it moved above that, it has taken a swift run to the upside. Now, compared to its peers like Can Bank or Bank of Baroda, it is still not, the momentum has still not got stretched. So yes, there is still more room. But then what you got to understand is that it has moved beyond 42. It has gone towards 51. So there could be some interim pullbacks, but then there is definitely room for the prices to move towards 60 in the next maybe couple of weeks. It will take some time, but then it has got potential to move towards its target around 60.
Do you have a similar view on IOB as well? Sanjay Chaudhary is posting a comment, and again, since this is from the same pack, I want to know if this also is likely to do well.
No, what I feel is that IOB is trading right now into some resistance zone, and I would wait for it to thaw down before I take a view on IOB.
Okay.
So right now it would be an avoid.
Okay, all right. Moving on to refinery sector, we have been getting a few queries on IOC and BPCL. This is from Anand, and I saw a couple of questions earlier on in the show as well. Talk to us about both of these stocks. Any of these refiners you like?
IOC and BPCL, yes, some relief in the oil prices does bring these stocks back into the limelight. But I would say the overall trend continues to be under pressure. So any rally which we are seeing in these stocks are undergoing are attracting supplies. So I would not be a buyer in both of these stocks. In fact, at higher levels, I would look to be a seller. In case if you're having some trading opportunities, you would like to go short in intraday or multi-day, you could look at rallies to sell because the momentum continues to be on the weaker side.
Okay, all right. The next query is from Shuvendu. He wants your view on Tata Alexi. Again, a lot of comments coming in for Tata Alexi actually, if I see the feed. Last 6 months, extremely volatile and difficult for Tata Alexi. But if we look at the year-to-date gains or year-to-date performance, it's still very much in the green. 14-15% is what it's yielded for its investors. Do you think it's a good idea to stay invested or maybe buy at current levels if this offers a good opportunity?
Yeah, Tata Alexi really had a Cinderella story, and from its highs at 10,000, almost 11,000, it has now come down by 40%, and the charts are only looking much more weaker. So I would not advise a buy, and wherever I am sharing my view, I'm only saying that keep your hands away from IT. In case you are having a shorting mentality, you could definitely go in with Tata Alexi on the short side, but I would not definitely be a buyer at any point in time. And if you are having some position, it's a call for exit at this moment.
Okay, all right. Lot of comments and queries, questions coming in for Paytm. Are you tracking that stock? What's likely to be the way forward?
Yeah, very much. You had mentioned in earlier also about Paytm, Nykaa. So all these new age stocks are having they are basically they are doing a U-turn right now, and especially amongst them, Paytm has been sought after by many people even at lower levels. So what I would advise all the viewers is that these stocks, be it Paytm, be it Nykaa, so I would like you all to stay away because there is no cause for buying on dips in these stocks. there are major exits been happening. So you would be the ones who will be holding those stocks while other bigger players are exiting.
Okay, all right. I hope people are taking note of that because lots of interest and queries coming in for Paytm. Moving on, we have another query. This is on Tata Chemicals. Kishore has written to us and he wants to know your view. Past 1 month, again, 12-13% down for Tata Chemicals. Good time to enter perhaps at 1,000 rupees levels?
Yeah, see, Tata Chemical did a good move, and in the earlier show, I was communicating with you guys on the result day. So there was a possibility of moving about 1200 levels, is what I had mentioned. And what has happened is exactly at 1200 levels, it has formed a reversal, and from there on, the trends have been continuing lower. So overall structure indicates that it could push down further towards 950 level, where it could actually come into a good value support region. So once it comes towards 950, would be the time to buy, not now.
Okay. Quickly for the final query for the day that we can accommodate, Kamalja is writing to us and they want your suggestion or recommendation on LIC Housing Finance. How's that looking?
Yeah, LIC Housing Finance, after a long time, came up with some decent numbers, and we saw the prices flare up. But then the trends in LIC has been pretty much stagnant, if I were to say. And yes, there have been some attempts being made to recover. But then what's really happening is that amongst the finance companies, LIC Housing Finance has not been able to drum up enough momentum, and it will continue to remain in a sideways phase. So it's an avoid from my side.
Okay. What about your own preferred picks in the market right now? Since you're liking the banks, any names from there?
Yeah, from the banking space, I would like to go in with ICICI Bank. I feel that ICICI Bank is a good bet on the long side. So one could look to engage in ICICI Bank at current levels. Maintain a stop loss at 925 and then have a target of around 945 to 955.
Okay. Any other pick you have?
And the other big what I'm finding is from Titan. So Titan is a good bet. So one can consider Titan at current levels because Titan is definitely indicating some higher prospects. And when you look at the charts of Titan, once it came out with some numbers, we had some good move, and after that, it spent some time in consolidation. Now I feel that we can see Titan moving higher, and we could expect the targets towards 2650 and have a stop loss at 2575.
All right. Thank you so much, Raja, for joining us and for talking to us about a host of stocks and addressing all our viewers' questions and queries as well. With that, we're going to wrap it up right here on Morning Trade. Thank you for watching.